MicroStrategy, a well-known name in the software industry, surprised the world in 2020. The company, which had built a solid reputation over decades, was primarily known for its business intelligence and analytics software. This software helped countless businesses make data-driven decisions, and MicroStrategy had become a trusted partner in the corporate world. The company made a bold decision. In a move that shocked both the tech and financial sectors, MicroStrategy announced it would invest heavily in Bitcoin. This wasn't just a small allocation of funds, it was a significant portion of the company's reserves. It decided to invest heavily in Bitcoin. This move was unexpected. Many questioned the wisdom of such a decision, given the volatile nature of cryptocurrencies. However, MicroStrategy saw something others didn't. It signaled a major shift in the company's strategy. No longer content with just being a software provider, MicroStrategy was now positioning itself as a forward-thinking, innovative company willing to take calculated risks. MicroStrategy's CEO, Michael Saylor, became a vocal Bitcoin advocate. He took to social media, conferences, and interviews to explain his vision. Saylor wasn't just making a financial bet, he was making a philosophical one. He believed in its long-term potential. Saylor argued that Bitcoin was not just a digital currency, but a revolutionary technology that could transform the financial landscape. The company's traditional business involved business intelligence and analytics software. This software was crucial for companies looking to harness the power of their data, and MicroStrategy had been a leader in this field for years. It had a long history of success. Over the years, MicroStrategy had received numerous awards and recognitions for its innovative solutions and contributions to the tech industry. However, Saylor saw a unique opportunity in Bitcoin. He believed that the digital currency could serve as a store of value, much like gold, but with even greater potential for appreciation. He believed it could provide a hedge against inflation. In a world where fiat currencies were being printed at an unprecedented rate, Saylor saw Bitcoin as a safeguard against the devaluation of money. He also saw it as a potential growth asset. Unlike traditional investments, Bitcoin had the potential to yield significant returns, especially as more institutions began to adopt it. This decision marked the beginning of MicroStrategy's journey into the world of Bitcoin. It was a bold move that could redefine the company's future and potentially set a precedent for other corporations to follow. As the world watched, MicroStrategy's embrace of Bitcoin became a fascinating case study in corporate innovation and risk-taking. Why did MicroStrategy choose Bitcoin? The answer lies in the economic climate. Traditional currencies were facing challenges. Inflation was rising, eroding the value of cash holdings. MicroStrategy needed a safe haven for its treasury reserves. Bitcoin, often called digital gold, emerged as a compelling option. Its limited supply and decentralized nature made it resistant to inflation. Unlike government-controlled currencies, Bitcoin's supply is fixed. This scarcity appealed to Saylor. He saw it as a way to protect MicroStrategy's wealth from devaluation. MicroStrategy didn't just dip its toes into Bitcoin, it dove in headfirst. The company embarked on a massive Bitcoin buying spree. They made multiple large-scale purchases. These purchases totaled billions of dollars. This aggressive approach made headlines. Each purchase further solidified MicroStrategy's position. They became one of the largest corporate holders of Bitcoin. This strategy was not without its critics. Some questioned the volatility of Bitcoin. Others expressed concerns about the regulatory landscape. However, MicroStrategy remained steadfast in its belief. They saw long-term value in their Bitcoin holdings. Acquiring such a significant amount of Bitcoin required substantial capital. MicroStrategy employed a unique financing method, convertible bonds. These bonds allowed investors to lend money to the company. In return, they received the option to convert their bonds into MicroStrategy stock. This approach was strategic. It allowed MicroStrategy to raise funds without selling existing shares. This minimized dilution for current shareholders. The convertible bond offerings were met with significant interest. Investors saw it as a way to gain exposure to both MicroStrategy and Bitcoin. Section 5. Investing in MicroStrategy riding the Bitcoin wave. MicroStrategy's bold move into Bitcoin created quite a buzz in the investment community. The company, led by CEO Michael Saylor, decided to convert a significant portion of its cash reserves into Bitcoin, believing it to be a superior store of value compared to traditional currencies. This unprecedented decision was met with both excitement and skepticism. Their stock became closely correlated with Bitcoin's price. As Bitcoin's value fluctuated, so did MicroStrategy's stock. This created a unique situation where traditional stock investors found themselves indirectly exposed to the volatile cryptocurrency market. When Bitcoin's value rose, MicroStrategy's stock often followed suit. This positive correlation attracted a new wave of investors who were eager to gain exposure to Bitcoin without directly purchasing the cryptocurrency. This correlation attracted investors seeking Bitcoin exposure. Many saw it as an opportunity to benefit from Bitcoin's potential upside, while still holding a traditional stock. Financial advisors began recommending MicroStrategy as a part of a diversified portfolio for those willing to take on additional risk. However, this correlation also came with risks. The volatility of Bitcoin meant that MicroStrategy's stock could experience significant swings in value. Investors had to be prepared for the possibility of sharp declines in their investment. If Bitcoin's price declined, MicroStrategy's stock could suffer. This downside risk was a major concern for conservative investors who were not comfortable with the high volatility associated with cryptocurrencies. This made MicroStrategy a high-risk, high-reward investment. The potential for significant gains was balanced by the possibility of substantial losses, making it suitable only for those with a high-risk tolerance. Investors needed to carefully consider their risk tolerance. They had to weigh the potential rewards against the risks and decide if they were comfortable with the level of volatility. They also needed to understand the dynamics of both the stock market and the cryptocurrency market. A deep understanding of these markets was crucial for making informed investment decisions and managing the risks associated with such a volatile asset. Section 6. The risks of a Bitcoin-centric strategy. While MicroStrategy's Bitcoin strategy offered potential rewards, it also carried inherent risks. The volatility of Bitcoin was a major concern. Its price could fluctuate wildly. This could negatively impact the value of MicroStrategy's holdings. Additionally, the regulatory landscape for cryptocurrencies remained uncertain. Governments around the world were grappling with how to regulate Bitcoin. Changes in regulations could impact MicroStrategy's ability to hold or transact in Bitcoin. These risks highlighted the importance of careful consideration and due diligence. Section 7. MicroStrategy's impact inspiring a corporate movement. MicroStrategy's actions sent ripples throughout the corporate world. Their bold embrace of Bitcoin challenged traditional views on corporate treasury management. It sparked conversations about the role of alternative assets. Other companies took notice. Some followed MicroStrategy's lead, adding Bitcoin to their balance sheets. This demonstrated a growing acceptance of Bitcoin as a legitimate asset class. MicroStrategy's move helped pave the way for a new era of corporate treasury diversification. Section 8. The future of MicroStrategy and Bitcoin. MicroStrategy's Bitcoin journey is still unfolding. The company remains committed to its Bitcoin strategy. They continue to explore new ways to leverage Bitcoin. This includes developing Bitcoin-related business ventures. The future of Bitcoin itself is also uncertain. Its price could continue to be volatile. However, its underlying technology, blockchain, has the potential to revolutionize various industries. MicroStrategy's bet on Bitcoin is a bet on the future of finance and technology. Section 9. Conclusion. A bold bet on the future of finance. MicroStrategy's decision to embrace Bitcoin was a bold and unconventional move. This decision was not made lightly. It was the result of extensive research and a deep understanding of the potential that digital currencies hold. The company saw an opportunity to diversify its assets and hedge against traditional market volatility. By investing heavily in Bitcoin, MicroStrategy aimed to protect its financial future and capitalize on the growing acceptance of cryptocurrencies. It reflected a belief in the transformative potential of Bitcoin. The leadership at MicroStrategy recognized that Bitcoin could revolutionize the financial industry by providing a decentralized and secure form of currency. This belief was rooted in the idea that Bitcoin's underlying blockchain technology could offer unprecedented transparency and efficiency in financial transactions. The company envisioned a future where Bitcoin would be widely adopted, driving innovation and creating new economic opportunities. Their actions challenged traditional financial norms. By integrating Bitcoin into their corporate strategy, MicroStrategy defied conventional wisdom, and took a stand against the status quo. This move sparked debates among financial analysts and industry experts who were divided on the viability and long-term impact of such a strategy. Some praised the company for its forward-thinking approach, while others questioned the risks involved in betting on a relatively new and volatile asset. They also inspired other companies to explore the world of digital assets. MicroStrategy's bold move served as a catalyst for other businesses to consider the potential benefits of incorporating cryptocurrencies into their financial strategies. As a result, several companies began to explore Bitcoin and other digital assets, leading to a broader acceptance and integration of these technologies in the corporate world. This ripple effect demonstrated the power of innovation and the importance of staying ahead of emerging trends. Only time will tell how this bet will ultimately play out. The future of Bitcoin and its impact on the financial industry remains uncertain. While some believe that Bitcoin will continue to grow and become a mainstream asset, others caution that regulatory challenges and market fluctuations could pose significant risks. Regardless of the outcome, MicroStrategy's decision to embrace Bitcoin has already made a lasting impression on the financial landscape. However, one thing is certain: MicroStrategy's journey has left an indelible mark on the world of finance and technology. Their willingness to take a calculated risk and invest in a disruptive technology has set a precedent for other companies to follow. This journey highlights the importance of innovation and the potential rewards of embracing new and transformative ideas. Their story serves as a reminder that innovation often requires taking calculated risks and embracing new possibilities. MicroStrategy's bold bet on Bitcoin is a testament to the power of visionary leadership and the impact that forward-thinking decisions can have on shaping the future of finance. As the world continues to evolve, the lessons learned from MicroStrategy's journey will undoubtedly influence the strategies of businesses and investors for years to come.